All right, folks, back to work. Boy, pretty darn good day today. Hope you guys made some money out there as well. Now, good news here tonight. We just completed a two-legged pullback back to the 200 EMA on both the S&P and the Nasdaq here this afternoon. Now, after that big move up that we saw last week, these two-legged pullbacks are oftentimes the perfect place to trigger a monster short squeeze back to all-time highs tomorrow. Now, the challenge, though, is picking the bottom of these moves isn't always easy, but I got some good news for you, though. There's one simple chart pattern I always look for during these nice, deep, two-legged pullbacks in an overall bull market. We're going to cover that chart pattern tonight. I have a couple other patterns, a couple entry setups I'm watching for tomorrow. By the time we're done tonight, though, live an easy roadmap to make some money to finish up the week on Friday morning as well. So charts are looking great tonight. Enough of the intro. Let's go finish up the week and make some more money on Friday morning. S&P and SPY looking great tonight in front of me. Nasdaq triple Qs here are all ready to go as well. I have three very simple but very important clues on the charts in front of us that are telling me where I think the winning trades are setting up for tomorrow. One of those big clues I mentioned here a moment ago, we had that big move up after the election last week, and now we've got that two-legged pullback right into that 200 moving average. Same thing in the Nasdaq triple Qs. We got one leg, two leg down into that 200 moving average. Anytime we see a big move, we saw last week after the election, a two-legged pullback is almost always a great spot for some bear traps and some buying opportunities. If we play our cards right for tomorrow, I got one easy chart pattern triggered, that nice short squeeze going back higher. So one of three important clues is right here on these hourly charts. However, I have two more important clues because these hourly charts, they're great for the big picture, but they're not going to help us time the entries. We're going to cover entry timing here in just a moment, though. Before we do that, though, let's check schedule for tomorrow. There's two things on my mind for tomorrow. First is the retail sales number at 8:30 Eastern time. That is the big market catalyst that we know about tomorrow, at least, so be aware of that. More importantly, though, tomorrow is a Friday, and Fridays have a very specific way about them. Fridays get illiquid into the afternoon, so my goal, my mindset on a Friday morning is I want to get in as early as I can when I'm at my best and the markets are nice and liquid, but I always try to leave a runner into Friday afternoon. Go back and look for yourself. About 50% of the time, every couple Fridays, you get these big runs in the afternoon. So retail sales tomorrow, 8:30 Eastern time. Be aware of that. But again, early in, take some profit, but leave a runner into the Friday afternoons. Fridays love to run. Now let's get back to our charts though, because I have two more important clues I promised you. Let's dive into the S&P and SPY first. We'll follow things of the Nasdaq triple Qs here in a moment. I mentioned earlier that big move up, two-legged pullback into that 200 moving average. Looks like the perfect place to trigger a short squeeze, but yeah, picking that bottom isn't always easy. Let's talk about two more important clues here right now on the tick charts. By the way, that is a 7,000 tick chart. All the specific time frames in the upper left-hand corner. And that yellow line right there, that is the 21 EMA. It's the only indicator I use to find lots of winning trades each week. There are two more important clues here on the tick charts. One big clue is we are 1, 2, 3 legs down. Now, why is that important? Well, if you've been through my free video classes, you know about measured moves. Most trends only go 3 legs. So we're now 3 legs down inside of that second leg off the high. This makes it a very key area of support down here. We're pretty bearish in the short term, obviously, but a lot of support now being 3 legs down on the faster time frame. The most important clue, though, I see in this chart right now is that trading range right there. Now, why is that range important? Well, because ranges like to rotate back and forth like a pendulum, right? The pendulum below, the pendulum up, the above. Now, the reason why this is important is because whenever we have a bearish range like this, in an overall bull market in the 60-minute time frame, we oftentimes see one of those rotations will break free and what I call a slingshot breakout, right? It'll slingshot as it rotates and really squeeze. So that range is another really big factor in the component that could trigger that big short squeeze for us here tomorrow morning. So put all three of these clues together here right now. Bullish overall on the higher time frame, 3 legs down on the faster time frame, and that trading range. I have 3 types of trades I'm watching for tomorrow. The first trade is one of my favorite ways to trigger a short squeeze. It's called a crown reversal pattern. What's a crown reversal pattern? It's ultimately a bear trap. We know we're at some key areas of support right now. Not a great place to be a seller, but we're so bearish going lower, we may keep on grinding lower. To time the entry on something like this, I want to trap the bears in. Let them try once, go higher, let them try twice. Now here's where the magic happens. I want to see a higher high in price. I want to get right below a prior swing, and then I want to see a nice, strong, convincing green candle closing above that 21 EMA. That could be the first chance to squeeze those bears, right? Trap those bears in, because if those bears are caught short down here, they have to buy their way out, and that's oftentimes that first domino that lights that fuse for that short squeeze. Now, hopefully, this will drive higher here for us. And once it squeezes higher, now we talk about trade number 2 for tomorrow. As it goes higher, who's waiting up there? Sellers, right? It's been a pretty bear market the last 24 hours. I don't want to chase the market going higher. After a short squeeze is triggered, we now look for what's called a 2-legged pullback. 1 leg, 2 leg. Now think about a measured move. 1 leg, 2 leg. Ideally, I would love to incorporate that 2-legged pullback along with that trading range. Ranges love to break out pullback. So if I can get lucky tomorrow, get that nice strong short squeeze going higher here, I don't want to buy high. I want to chase after it. I want to buy nice and low. I would love to use 1 leg, 2 leg. Now remember, I'm not going to pick a bottom on this, all right? I'm not going to blindly buy that 2-legged pullback, because for all I know, it'll go all the way back down again. And guys, I have a great entry pattern for that too. We'll talk about that in just a moment. What I would love to do though is try to time this entry off the top of that range. And to do that, I'm going to use a very simple sequence of entry patterns we talk about a lot in our trade room. First of all, I'm going to use a failure pattern, right? Let the bears try once. The bears try twice. I call these failure patterns in our free video classes. This would be a 2-try failure after a 2-legged pullback, 2-try failure. Why 2 tries? Because again, I want those stops. I want those sellers to have their stops there. I can squeeze those stops running higher. Now, second pattern on this is always going to be what I call, it's basically a technical trap pattern. In price action trading, these are called trap patterns. This would be a bear trap pattern. Now, there's 3 components to this bear trap entry. It's going to be a shallow pullback. It'll barely pull back to that moving average, the 1. The second piece of this is a higher high in price. And the third will be a move right below that low. Right below that low, strong green candle closing above the 21 EMA. Okay, so quick recap here. Quick recap, right? As we're going lower, I'm not trying to pick the bottom. I'm going to trap in those bears, use that crown reversal pattern we all love so much in our trade room. Hopefully that will squeeze those stops running higher. As these stops get squeezed running higher, as it rips and goes higher, I don't want to chase after it because it may get knocked back down to retest a low. Again, we're pretty bearish here in the short term. Whenever I see a big jump up like this, anytime I see a big move, it's always 1 2-legged pullback. That will give us the general area. And again, my favorite way to make money with this stuff is don't pick a bottom on that. Don't use indicators for divergence or tape reading. None of that stuff works consistently enough. Trap the bears in. Let those rookies try twice. Use that failure pattern I teach in the free video course. And then as it rolls higher, look for that separation off the moving average that higher high in price, and I want that nice strong green candle closing back above that 21 EMA. That's trade number 1 and trade number 2. Now, heads up, I have one more trade I want to talk about, which in all reality might be the best trade for tomorrow. Before we do that though, let's slow down for a second because we've covered a lot of ground so far in this video. I know most of you guys and gals watching right now, I know most of you folks know these patterns already. You're making money with these already. But if you're here for the first time right now, this might be a brand new language. Crown reversals, failures, bear traps. Don't you worry though, I teach this entire roadmap. I have a lot of examples of crown reversals and bear traps. I teach the entire thing in a lot more detail in our free video classes. I'll put a link up top here for you, upper right hand corner. Grab that link that popped up there and take that free trading course, because the strategy I teach in that short video series will teach you a simple trick we use in our members trade room that tells us where the winning trades are going to be each morning. More importantly, I want to teach you my 4 favorite entry patterns, help you time better entries, start making more money each day. Guys, the markets are way too good right now not to be making consistent profits. If you're tired of missing the best entries, if you've lost your confidence in your current trading strategy, hit that link that popped up there. Take that free trading course, learn the roadmap, learn all these setups. Everyone loves all the trade examples I include in that free video course. It is perfect for anyone who's serious about making money in these markets. And don't forget too, guys, I'm going to also put all the important links I talk about tonight in the description of the YouTube video. I'll put the free class links down there. Again, if you want to learn more about these entry setups, a lot of examples included in that free video series, I'll put that in the description of the YouTube video. Keep in mind too, we trade together every morning. I can't think of any better way to learn to trade than trading with us every morning. I'll put trade room information in the description of the YouTube video. And also be aware too, I post a lot of charts and videos and mindset stuff on Twitter, or X as they call it these days. If you're on Twitter, X, give me a follow. Again, all the details you need to learn more and hopefully earn a lot more are all included in the description of the YouTube video. So where did we leave off? Now that you know more about how to learn more about all these entry patterns I'm talking about right now, I talked about that crown reversal. I talked about that 2-legged pullback, ideally right off the top of that trading range. What if we don't get it, right? What if we jump up? What if we wind up all the way back to that retest of that low? In all reality, trade 3, this could be the most lucrative trade of the week. Whenever I have a big move higher like that and a really deep pullback, oftentimes this momentum is so strong, we'll get that squeeze going up. But when it pops up, again, we're so bearish here right now in the short term, a lot of times it gets knocked right back down to retest the low. Now, these double bottom retests are oftentimes most lucrative. These are my favorite type of trade in these situations, because think about it. Anybody who sells short up here, they're taking their profit at these lows. What that tells me is all the sellers up here become buyers down here. This is a horrible spot to be selling, which means it's a great spot, the ideal spot for a bear trap. So one of my favorite trades in an overall bull market with a big deep pullback we're seeing right now is go up, retest that low. Now again, I'm not going to pick a bottom on this. In this situation, all I need right now is I don't need that crown reversal pattern. I wouldn't argue about it. I wouldn't argue with it. But all I need right here is that same 1 try, 2 try, trap those bears in. I can be relatively aggressive on this trade because, again, anybody who sells up here, they're buying their way back here. These are rookies who are selling on the retest of that low. So once I see those bears come in, try twice, light those stops up with that failure. And don't forget, the market now wants to go back up and take up that high, right? That's the target now, going higher. Before we get there, look for that separation off the moving average, that higher high in price. You will soon learn to love these setups. They're one of my favorites in our trade room. Again, it's simply a trap pattern. In this case, it's a bear trap pattern. Targets off at the high, and you better leave that runner because Fridays, you know they love to run. So third and final trade here on the S&P. I got a couple more variations, some bonus trades we'll talk about here in a moment here on the Nasdaq, is that double bottom retest, right? Don't pick the bottom, trap the bears in, squeeze those stops, add to your winners, right? Remember, if you want to make more money, add to your winning trades. To do that, you have to know where the market is trying to go. Anytime we pop up and bounce off that low, it'll want to go right back up and take out that high. Those are three of my favorite trades here on the S&P. Let's talk about some variations of this now on the Nasdaq. My favorite ones are pretty easy, I think, but we may not get those kind of picture perfect patterns for tomorrow. Let's grab the Nasdaq here, and we'll talk about some variations of this here on the Nasdaq and the triple Qs. Now, before we dive into the Nasdaq though, if you're enjoying this video right now, please help me grow this channel by hitting that like button, subscribing, and sharing this link with other trading buddies. Guys, that makes a huge impact on my channel because YouTube rewards me every time you like, share, and subscribe to this channel. I get it. I know we're all busy people these days. I appreciate you guys spending a few minutes with me every evening on these videos. So thank you so much for the likes, subscribes, and all the ongoing support. Now, let's get back to business here and talk about the Nasdaq and some variations. Big move higher, two-legged pullback right into that 200 moving average again. This is oftentimes the perfect spot to grab a short squeeze here. The challenge again is, here's the challenge. The challenge is we're so bearish, right, on the short-term momentum right now. And so because of that, we have to be a bit selective as far as the entry patterns we're going to use right now. The Nasdaq is clearly three legs in as well. Now remember, when it comes to three legs down, it's one leg, two leg, three leg. Remember, its first leg is always the measuring leg. First leg is always the measuring leg. The second leg is oftentimes much larger or much smaller. So don't be surprised if sometimes three legs looks like that, where the first leg, again, is always the measuring leg. The second leg is not usually smaller. In this case, it is though, right? In this case, it is. So don't worry if that second leg is larger or smaller. The third leg though is almost always going to be symmetrical, right? If you've ever studied Elliott wave before, right? The 5-wave sequence, right? 1, 2, and 3. Elliott wave would say, R.N. Elliott would say, the first leg, third leg, or first wave, fifth wave, right? The middle wave is the impulse wave, right? So again, a lot of times they're larger, sometimes they're smaller. Right now you're seeing the middle one there is smaller. So the S&P had a pretty symmetrical three legs down. Nasdaq, same basic idea with three legs down here right now into a great area of support. What I love about the Nasdaq right now too is that range right there. I mentioned earlier that whenever I have a bearish range like this, these things can slingshot really fast because again, we're not an overall bear market, we're an overall bull market right now, right? So, okay, so pretty bearish in the short term, but a lot of reasons to like the idea of triggering a short squeeze. I mentioned earlier the crown reversal, still definitely the best way to trigger a short squeeze is always going to be a bear trap down here, or as I call it, a crown reversal. Bears once, bears twice. I need to get that higher high. I need to get underneath that low. It needs to be a bear trap pattern. And if you're in my free video classes right now, hopefully that makes sense, right? There's a difference between a trap pattern and a failure pattern. Traps go right below that prior swing. They are the safer of the two. Got to be a bit safer, a bit more cautious on this because again, we are so bearish in the short term. I mentioned earlier though, that if I can get that spike up, I would love to get a two-legged pullback, right? That two-legged pullback will be ideal there. Now, one variation of that move going higher. Oftentimes what happens is we get that squeeze and we start seeing the market begin to grind and grind and grind. That's a really big giveaway. Whenever I see the market squeeze up like that, what will happen is it'll pop and separate away from that moving average. When you see it separate off that moving average, remember separation equals strength. And when it grinds like that, these are pretty easy. All we do is we mark a trend line off the highs. We bring that trend line down around those lows, right? That makes a new channel. And then my favorite trade is always to go back and look at these prior swing lows here, find a prior swing low that lines up around the low of that channel. These are almost guaranteed winners when, again, you get that separation off the 21, grinding higher. The hardest part about these is that that little voice in your head is going to tell you to jump in and chase that thing going higher. But remember, you don't want to chase it higher because we're so bearish here in the short term. This could easily go up and get whacked back down again, right? And go back to retest that low, right? So we don't chase after it going higher. I want to buy into that move going lower. And of course, I love trap patterns. I love to get underneath these prior swings and use bear trap patterns. A lot of times too, these end up being beautiful failure patterns where we'll get under the moving average, the bears will come in, they'll try to short that sucker, but again, when you get that momentum moving like that, the bulls, that pop and separation, this oftentimes sets up for a beautiful failure into pullback combination. Now, one really cool thing about pop and grind moves like this is the pop move is the measuring move. We mentioned earlier that trends love threes, right? 1, 2, 3. I mentioned earlier that the first leg is always the measuring leg, right? Okay, so first leg, measuring leg. So this first leg of that reversal, that pop leg, that spike leg is the measuring leg. Now, why is it important? Because remember, you want to make more money, get better at holding on to your winners. Once I know how big that leg is and I know how deep that pullback is, now I know where to leave that run or two. Again, Fridays love to run. Think about 1, 2, 3. 1, 2, 3. Makes sense, right? 3 legs to a trend. First leg is always the measuring leg. Hopefully that makes sense. That is one variation of the two-legged pullback we talked about earlier here on the video. Another variation is, once again, I mentioned earlier that we might get that crown reversal. We might get that short squeeze going higher, but there might be so many bears up here. Again, because we're so bearish in the short term, they may run that thing right back down to that low. Now, I mentioned earlier on in the video here tonight, I would love to use that two-try failure, right? Bears once, bears twice, trap those bears in and squeeze. Again, notice I can be a lot more aggressive on the double bottom than I can be on the initial bounce. That makes sense? I have to be extra cautious trying to pick a bottom. I don't care how bullish we are overall. I'm a short-term trader. Short-term traders have to respect the short-term momentum, right? That's why a crown reversal pattern is critical here. Again, it's a more cautious trade. It's a bear trap trade rather than a failure trade, which again is a variation of a bear trap, but a bit more aggressive. Okay, so I mentioned that earlier on the video. What I want you to be aware of though is that oftentimes we get that double bottom, but because everybody who sells up here, because they take their profit down here, and because we're so bullish overall, oftentimes we don't get a chance to go 1, 2, and then back up again. Sometimes we'll overshoot that low and it will just whoop and run right back up again, kind of squeeze running higher again. As I mentioned earlier, these double bottom retests are some of the most lucrative trades we find in our trade room because it traps everybody in, right? All the bears up here are buyers down. Okay. So how do we trade that? It's that same V bottom again. If it V bottoms off that low and begins to grind, remember, whenever it separates off that moving average and grinds going higher, these are very, very easy. The only challenge on these is mindset, right? Staying patient and not chasing after it. Your patience is almost always rewarded on these by marking off that high, finding off that low, right? Find that channel. And again, look left, find one of these prior swings. And that is usually where the magic happens, right? That first test. In the video classes, we talk about the first test is the best test. This is the first touch of the low of that channel. And I wish I had more time on these videos. I can't teach everything. I go over a lot more of this, obviously, in that free video class I mentioned earlier. But again, it could be a trap pattern like this one, a failure pattern, a pullback combination. And remember, try to leave those runners. Take a quick one-to-one first target, get rid of the risk, and I'll be leaving those runners on a Friday afternoon. All right, guys, that's the game plan for tomorrow. My favorite setups, some variations of these. Now we'll get a good night's sleep, come back tomorrow, and see how that retail sales number comes out tomorrow at 8:30 Eastern time. Now, speaking of tomorrow morning, guys, come trade this stuff with us. The easiest way to make consistent money in these markets is to learn and trade along every morning with us in our trade room. As always, guys, I'll put all the important links you'll need to learn more about the entry patterns, the setups, the strategy overall. Definitely start first with the free video class. Everyone loves the free video course. A lot of examples, a lot of trade examples in there. People love those inside the free video class. Also, keep in mind too, any error messages, any trouble getting access to our free video classes right now, use the live chat tool, call the office, send me an email. I'm always here to help out. Can I get you access to that stuff if you have any problems getting started there on the free video class? All right, guys, hope you learned a bunch here tonight. Hope you use this knowledge to earn a bunch tomorrow. And hopefully I'll see you sometime soon trading with us as a member of the morning trade room with all the SOT members, 8 o'clock Eastern time every morning, guys. In the meantime, be well out there. Be nice to each other, will ya? And you better be here next time, all right? Adios, amigos. Bye for now.